I'm going to teach you how to manage your risk and limit your losses 100% of the time. Risk management is one of the biggest reasons why traders fail, because they have the strategies, but they don't have the risk management mindset to go along with those strategies. You need to understand that as a trader, you are also a risk manager, and the way in which you deploy your risk on every single trade, that's going to have a direct impact on your trading profits. As you're about to see, managing risk is actually pretty straightforward and easy, but what's difficult about it is staying disciplined, making sure you're managing your risk correctly for every single trade that you take, and you never oversize or over leverage your positions. I'm gonna teach you everything you need to know about risk management in this short video, so let's not waste any more time and let's hop right into the video. The first step in managing risk is to figure out what is your risk in the first place. Now, this could be a percentage of your account, or this could also be a dollar amount. For me personally, I always like to use a dollar amount. If you're a beginner trader, my recommendation is to start small and then scale your risk over time. This number is also going to stay constant for every single trade that you take. For example, if there's a setup that you think is higher quality and there's another setup that you think is lower quality, you would be risking the same amount of money on both of those setups. The amount that you risk for every single trade should also remain constant. What this means is you should not be deviating your risk based on your perception of the quality of the setup. Let's say you find a trade that you think is okay, let's say you rate it a 7, and then you find another trade that you rate a 10. You should be risking the same exact amount of money for both of those trades. Just because you found one setup that's higher quality in your eyes doesn't mean you should be risking more money on that trade. By keeping your risk constant, you're gonna have a very structured risk management system, and that's what you're looking for in trading. You're looking for structure. In order to figure out your risk, what I would do is sit down and for a solid 10 to 30 minutes, figure out what amount of money are you comfortable with losing on a losing trade. You want to pick an amount that's not completely negligible. For example, you want to pick an amount that's not negligible where you just won't care if you lose that money in the first place, but you also don't want to pick an amount that's way too high where it's going to psychologically and emotionally affect your decision making when you're in the trades. This is actually what most traders do. They risk way too much on their positions, and then they're caught looking at their P&L the entire time as opposed to properly executing the trade. For this example, let's say your risk is $100 for every single trade that you take. What that means is if a trade does hit your stop loss, you're only going to lose $100 on that position, which is your predefined risk. If your risk is going to remain constant for every single trade that you take, that means your sizing, the amount of shares that you buy or that you short for that position is going to be variable. It's going to change from trade to trade. For example, if you buy 100 shares of a $1 stock, well, that's not that much capital at all. However, if you buy 100 shares of a $1,000 stock, that is significantly more capital, which means your share size is going to change for every single trade that you take based on two metrics. And those two metrics are your entry price and your stop loss price. And to go even further, what you're going to be doing is calculating your stop size. Your stop size is simply your entry price minus your stop loss price. This is essentially the distance between your entry and your stop loss. You need to know your exact entry price and your stop loss price for every single trade that you take. So if you're not doing this already, that is a major problem. If you don't know your entry or your stop loss price, well, it's impossible to be able to manage your risk. So let's say for an example, your entry price is $4 and your stop loss price is $3.90, which means if the price hits $4, you enter into the trade, and then if it drops back down to $3.90, you exit out of that trade. Well, if you do the math, your stop size would be $4 minus $3.90, which of course equals 10 cents. This means the difference between your entry price and your stop loss price is 10 cents, which is very important information for us as traders. Now that we know what our risk is, which is $100, and we know what our stop size is, which is 10 cents, now we can figure out the sizing for this position. To calculate lot size, it's going to be your risk divided by the size of your stop. If you do the math, it's going to end up being $100 divided by 10 cents, which equals 1,000 shares. This is the maximum amount of shares that you could purchase for this position to ensure you only lose $100 if it does hit your stop loss at 390. This calculation is extremely easy to do, and you need to be disciplined enough to calculate this for every single trade that you take. If you oversize your positions, you're going to end up losing way more than you're comfortable with for that trade. Simultaneously, if you undersize your positions, well, you're not going to end up making as much profit as you desired because you're not risking enough on that position. The other part about risk management, which also ultimately comes down to discipline, is actually following your stop loss. Let's say you do size your position correctly, you enter at the right price, but then when it does approach your stop loss, you ignore your stop loss price and you let the trade go more against you. Well, the problem with this is you're not actually following your system. You're not following your stop loss, and you're going to end up losing more money than you intended on, just because you're not disciplined enough to exit at the price that you set yourself before you took the trade. By sizing your position and having this system and staying disciplined with it, you're gonna know the worst case scenario for every single trade that you take. And the worst case scenario is you lose your predefined risk. That's going to take so much stress from your trading because you know that, hey, worst case scenario, I'm going to lose my predefined risk, which is what I'm comfortable losing in the first place. Another critical component of risk management is understanding that losing is inevitable in trading. It's a part of the game. It's a part of the profession. And you need to accept that you're going to have losing trades, and you can't let those losing trades negatively impact your psychology or your emotions. And if they are, that means you need to lower your risk. You also need to have a maximum risk per day. For example, if you lose, let's say 3 or 4 trades and you're down $300 or $400 on the day, you need to have a certain number where you turn off your computer, you step away from your desk, and you're done with trading. So many people are actually pretty good traders, but they just don't have the discipline to stop trading when things aren't going well, and they end up risking more as they're losing, and that causes them to blow their account and, over leverage or over risk, and they end up losing way more than they intended on. You need to have a specific set loss for the day. And once you hit that set loss, it has to be a rule in your trading. Once it does hit that set loss, you're done for the day, you step away, and you don't trade until the next day or the next week or whenever you're comfortable to return again. As you can see, risk management is pretty straightforward. It all comes down to discipline. Are you disciplined enough to consistently follow your plan, to stay structured in your trading, to not over risk, and to consistently follow the share sizing formula, and then not deviating from this formula, not oversizing your positions? Hopefully you enjoyed this video, so make sure you subscribe and comment your thoughts. And if you want to trade live with me every single day, you want to be personally mentored by me, you want me by your side, in your corner, every step of the way along your trading journey, make sure you book a call below for my one-on-one mentorship program where you trade live with me every single day. We're on the same call. You're watching my execution. I'm streaming my screen, and we are making money together. Happy trading, and hopefully you found a ton of value in this video.